want you to pull my credit. Can't you do a pre-approval without pulling credit? No, that's the whole point. We need your credit to do the pre-approval. So we hear this so often, and I think it's just a misconception. People don't really understand what pre-approval is. What is a pre-approval? What is happening with a pre-approval? What does the lender do? Well, the lender is going to have you do your information, usually online, an online application, could be over the phone. We're going to gather all that information. So questions like your name, your home address, your job, how much do you make, how long have you been there, who do you bank with, how much do you have in your account, do you have any other like IRA, retirements, etc. And then things like, what kind of a purchase price are you thinking about? How much would you like to put down for the down payment? So we're going to take all of that information, but we really need the credit report. I mean, that's the basis of the whole pre-approval. It tells us what all of your debts are. It tells us what the balances are versus the payments. It gives us a credit score. All of those things go into your file. We pull the credit, it dumps right into your file, and then all of the things that we need are all within your file. And then we figure out, what is your debt ratio, your debts versus income on the home price that we're looking at? And are you able to qualify for that payment? And then we actually run it through an automated system, whether it's Fannie Mae, Desktop Underwriter, or Freddie Mac, Loan Prospector, and we get an approval. And the approval has conditions. So we're typically going to need pay stubs, W-2s, tax returns if you're self-employed or have rental properties, or other types of income like dividend and interest. We're going to need bank statements. We're going to need a copy of your ID. We need things. We need documentation. The approval is our word that we're able to do a loan for you, that we're committing that you're going to be able to close and perform on a sales contract. And when you go to put offers in on a home, the buyer's agent that you're working with will want a real full pre-approval. And a listing agent and a seller will definitely want a pre-approval. Your offer will not be worth anything unless they know we've looked at your credit, we've run your income, we've seen the income documentation, we've seen your assets, and we know that you are a qualified, fully pre-approved borrower that can go out, write a contract, and close on that home, typically within 30 days or less. That's the average sales contract today. So what happens when we pull your credit? How many points will that hit on your credit score? Typically it's 3 points or 5 points. So very, very minimal. It does not affect your ability to get approved. And we never see that, oh goodness, just because we pull credit, now we're not going to be able to get approved. The only time we see an issue with that is with a very, very low score, maybe even lower than what they can qualify for a mortgage anyway. And in that case, we would want to see that credit anyway so that we know what we're dealing with and we can help you get to a better credit score for qualifying. It's necessary. Got to pull the credit if you want a pre-approval. So I hope that makes sense. Give us a call if you're ready to buy a home, if you'd like to get pre-approved, or if you just want to talk more about the process. Feel more comfortable and understand what happens behind the scenes with the lender in order to get you pre-approved to buy a home. Give us a call, Michelle Oddo, the Oddo Group, Luminate Home Loans.